We have Ken Chan from Ribbon Finance. He's a former engineer with Coinbase. He's a serial entrepreneur back at home in Malaysia and is now based in the UK, where he is a co-founder of Ribbon Finance. Ribbon Finance is a new first of its kind protocol that helps users access crypto structured products for DeFi. Its tagline, and I love this on the website, is sustainable alpha for everyone. So what are structured products? Well, in the world of finance, this typically comes in the form of a package of financial instruments that gives retail investors easy access to derivatives. In Ribbon Finance, this means they use a combination of options, futures, and fixed income trading strategies to improve a portfolio's risk and return profile. If you're not familiar with derivatives, it might be helpful to get yourself up to speed through Google. But Ribbon Finance features the Theta Vault as its core product with 4 offerings as part of this vault currently. And more importantly, they recently announced a version 2 release of their protocol. This was I think last week. And it's a new release which will focus on automation, decentralization, proper accounting, and governance. So full disclosure, ChainSafe recently helped Ribbon Finance complete an audit of their smart contracts, which is how ChainSafe and Ribbon first got connected officially. Nevertheless, I consider myself lucky to have Ken join us today. And at risk of stealing too much of his thunder, I'm going to stop now and invite Ken to unmute yourself and share your screen. And yeah, welcome.
Hey everyone. Yeah, hopefully I live up to the co-intro that just happened just now. And yeah, no, I thought that it was epic to share the stage, the virtual stage at least, with Rick, because Ethers is amazing. Love using Ethers. It's like the backbone of everything Ribbon does as well. So yeah, love that it's opinionated and all of that. Okay, so now I'm going to share my screen. Okay, so I'm just going to walk you through like this. Okay, so Ribbon Finance, what we are working on is crypto-focused structured products. So how I would describe structured products is structured products are these collections of things like derivatives, options, futures, sort of packaged together into a very simple product for users to use. So below the surface is all really complex stuff to help users earn yield. But we've already seen this before, right? Crypto already has high yields. So in this example, it's Badger Finance, where you can somehow earn 155% APY, which is asinine, crazy. So the thing about these yields is that at the time of these screenshots, 155% number there, 80% of that comes from Badger emissions. So it's a bit like really weird Ponzi-nomics happening there, where it's like the yields come from emissions of the tokens itself. So it's really weird there. So we don't think that is sustainable in crypto, in DeFi. So we think that Ribbon offers an alternative source of yield that's sustainable, like Tim mentioned. So this is what we call the OG yield farming. So in TradFi, what would happen is that people would sell options to earn yield. So if you remember from the GameStop fiasco, what happened is that a lot of people bought these options and basically gambled on these call options and tried to make money from there. So on the other side of these option buyers are option sellers. What they basically do is that they say, okay, I'm betting that the price of a stock won't go to a certain price. And if it hits beyond that price, I lose money. So we'll see more concrete examples of what an option is later. But what Ribbon does is basically automating all of that. So this is what we call an options vault. So when you deposit ETH into the vault, what happens is that on a weekly basis, what it does is it means call options and sells it off to market makers. So it's free yield for you, not really free, because we'll see that it actually introduces some risk. So giving you an example here, this is what we call a payoff graph So if you are selling, let's say, BTC options on a weekly basis, you have to think of it as like on a weekly basis, I'm betting that, let's say, BTC won't go over 60K. So if it goes beyond 60K, I lose money. But if it stays below 60K, I make money. So every week you make these bets. So this week I'll bet 60K. This another week I'll bet 65K. So it adjusts upwards, right? So how it works right now is fairly centralized. We have a privileged role called the manager, which decides on the strike price. For example, Bitcoin calls, it'll decide, okay, we'll sell a Bitcoin call option at 60K, and then we'll mint it, and then we'll sell it with air swap to market makers that we're connected to. So this air swap process is also centralized. We'll have it basically like is like a Telegram chat where we're chatting with them and selling and offloading these options to them. So they basically make money from this. Okay, so we're going to talk about V2, which basically decentralizes these processes about the Theta Vault. So one of the features are algorithmic strike selection, which basically in this first part here is decided by a manager. And the second is open auctions, where these options that are minted are sold openly to anyone who wants to buy them instead of these market makers that are whitelisted on our behalf. So V2 fixes this. First, the strike selection contract will algorithmically select a strike price based on some inputs. And then once the call options are minted, it will be offloaded to an auction where anybody, participants, market makers can actually buy them. So this is an example of an open auction. The UI isn't great because I guess it's not our fault, but yeah, this is how it looks like. Right, so really cool tech here that we want to show is RVol, or ribbon volatility for long. It's an open source library that basically prices options with on-chain data. It basically looks at Uniswap pool and calculate the volatility of prices based on some period of time. And this basically enables V2's algorithmic strike selection feature. And with this, you can compute any realized volatility number for any V3 pool out there. So if you wanted to turn around and say, okay, I want to do sushi options, you can actually use this number to calculate a price of a sushi option or any altcoin out there. So this is how it looks like. First, you can do vol oracle, get analyzed vol for a certain pool address. Then we also have a separate contract called the pricer, which is get option premium. You pass in a strike price, expiry, and whether it's a put or not. And then it spits out how much an option should be priced at. Option delta related to premium as well. Yeah, so that is basically the tech behind V2. Happy to dive into V2 code if you guys are interested in that kind of stuff. And also, finally, we're hiring Solidity devs, so gotta shield it at the end. This is my email there, if anybody wants to reach out.
Always got to get the shill in. But
sure.
I mean, if you have time, we'd love to dive into the code.
Sure. So yeah, we can do that for sure. So what I'll walk through first is RVol, which is what I mentioned before. Its goals are to build volatility indices. You can query this information on-chain as well. So the problem we saw with these different option protocols that are online, like Hedgic or Siren, is that a lot of them actually manually input these volatility numbers. They basically go to Deribit and say, okay, this is the volatility of Bitcoin over the past 30 days. And then we'll input it manually by just posting it on the blockchain. So it's not great because it's not trustless. It's dependent on people updating the state on the contract. So Here we're trying to solve it by looking at that pricing from Uniswap because we think Uniswap is sufficiently liquid for that purpose already. So how it looks like in practice, yeah, we basically store like the mean of the prices over time, and then from that we can calculate something called volatility, which is a standard deviation of these prices. Yeah. Okay, so another cool part is that we have the options premium pricer, which has the function called get premium. And then from there, we actually use Black-Scholes. Black-Scholes is a method that's discovered some time ago to calculate how options should be priced based on certain inputs. And those inputs are like the spot price, the expiry of the option. And so we are basically codifying that on the smart contracts. Yeah. Maybe something interesting to share is also strike selection. So every week you basically have to say, okay, I'm betting that Bitcoin won't go over 60K. How would you get that number 60K? So what we have is that we have a parameter called delta, and delta just means that the higher the delta, the more likely that you are going to lose money, essentially. So if I have, let's say, a delta of 50, what that means is that I'm betting that Bitcoin will go over, I don't know what's it at right now, 50K. So there's a very high likelihood that you'll lose money. So if you choose like a low delta, like 10 delta, for example, you select something like 55K, something like that. So based on that delta number there, you can say, you can iterate through a list of strikes. You start from the spot price. Let's say BTC spot is at 47K right now. You can iterate from the spot price 47K, 48K, 49K, and see which strike price is the closest delta to what we are trying to achieve. So this is the while loop here, as you can see, and then we are doing like a brute force approach to calculating what the strike price should be. If found, target strike price, and yeah, that's basically it. How we're calculating the strike price for on a weekly basis. Yeah, so open to questions. Sorry if that wasn't enough context. Happy to just walk it back if you guys need to about options and stuff, because it's not for the layman for sure.
Definitely like some complex like financial like magic and smart contract magic too. We had one question from Steven Swartz. Where does the risk-free interest rate come from for the pricing model?
Oh, okay. So initially we thought we wanted to use something like compound, for example, but we just walked the decision back because the period at which we are selling the options is just 1 week. So I don't think it's like great to even have an interest rate number in that model at all. It's just simpler that way too.
Cool. And yeah, if anyone else has any questions, please feel free to drop it in the chat box or raise your hand or unmute yourself. But me, I have two questions for you, Ken. And again, it's just trying new questions. So, you know, if it doesn't apply or if it's stupid, feel free to just say pass. But I took the liberty of creeping your LinkedIn. And you have quite an interesting background, right? You have experience in fashion retail analytics, building custom software solutions, before making a dive into blockchain development by first interning at, or first being a developer at Omnalytics, then interning at Zilliqa, and then jumping into custody engineering for Coinbase. So if you were to highlight two high impact habits you had during that journey to becoming a blockchain developer, just as a lesson for prospective developers looking to break into the space, what would they be?
Yeah. Tough one. It's always hard to answer these like psychoanalysis questions where you're trying to psychoanalyze yourself and try to give advice based on that. I'd say in crypto, at least, it's always useful to lend a hand to anybody in the community. So just jump in. These are the PRs that are open. Just lend a hand, because in crypto, people are so open and public about these issues, right? And they're always open to help as well. So it's always nice to just jump into a Discord, offer some help. You can really make yourself like a public figure in that sense, just helping out, developing new things and putting them out there. Create side projects, putting them out there, showing yourself off. Yeah, that will really pave your path as a dev, I think.
I definitely agree with the Discord. Not that I'm a developer, I'm non-technical, like as fuck. Like I don't do any coding, but yeah, I feel like being part of a Discord community and just like adding in your thoughts and helping develop stuff over there definitely seems like a high value add thing for developers. And then, okay, so my next question is, your career trajectory is notable for the marked shift from building custom solutions at a company you founded to suddenly becoming a blockchain developer. If you had to query your memory for a second, what was the motivation to get into blockchain development? And then how has that changed since founding and creating Ribbon Finance?
Yeah, I think I first joined the space at like 2017. So it was the ICO boom that brought a lot of people in, as many of you are also, I'm sure. I think from then just realized that blockchain, cryptocurrency is really cool, will be a big thing. So easily the best bet ever I could take. And then, what was the last part of your question? Like advice, was it?
Yeah. How has your motivation changed since founding and creating Ribbon Finance? That too generic? I guess here's a better question, actually. It's, you went from, I'm not sure what your background is like in terms of like what you were developing back at Coinbase or your previous companies, but jumping into Ribbon Finance, you're creating these complex financial products. So it's like deep like finance stuff. So was there a particular resource that like you really relied upon to learn about like all this finance stuff, and then also coding all this stuff, and then pairing that with blockchain?
Yeah, most of the finance stuff was just learned online and just trading yourself. Just opening a Binance account, opening a Deribit account, just start trading, and then you sort of understand the patterns and all the stupid symbols options comes with. And then for blockchain development, it's always just reading up docs, crypto zombies for beginners.
Great, thank you. We got one question from Carl. How does your team handle and or consider the potential regulatory risks of such financial products? It's a good question.
Yeah, the regulatory cover for us is that these are like open source strategies that people run. So we are not trying to manage your funds there. We're not running a hedge fund. These are automated strategies that are open for anybody to use. So yeah, we're just like software developers.